This is the second video that I'm making from the ICC trading strategy series. And in the previous video, I spoke about the indication when it comes to ICC. Now, the indication is what shows you where price is going to move for an extended period of time or for a set period of time. And usually it is very important because that is where price shows you which direction is going to go, either up or down. But the correction is also as important as the indication because it is the correction that leads to the continuation, which is where your entry comes from. And it's also the correction that helps you to know where price wants to get back from after making the indication. So in this video, I'm going to show you how to find your corrections when it comes to ICC. Sometimes the corrections are not too deep. Sometimes they are very deep. I'm going to show you how to identify the right correction when it comes to ICC trading strategy. So if you're excited, make sure you watch this video to the end. Let's get right in. So before I actually continue, I would like to throw some light onto the indication. So for the indication, the indication is where price either breaks above or below a swing level. Okay, it is where price breaks either above or below a certain swing level. So what do I mean by this? So swing levels are when price, or swing levels are made when price moves in the opposite direction sharply when it is making a certain movement. So if price is moving up like this and then it reverses sharply, that point of reversal is what you call the swing level. Similarly, if price is moving down and it reverses sharply from the bottom and it goes up, this point is what we call the swing point. So if price wants to show you where it wants to go, maybe this is the 1 hour time frame that you're looking at, and so price wants to show you where it is going. Now, why do swing levels occur? So swing levels usually occur because of sellers or buyers. So if price is buying up and then it reverses down, usually what it tells you is that there are a lot of sellers sitting at that point. Okay, then if price is actually moving down and then it reverses sharply, the opposite is true for that also. This tells you that there are a lot of buyers sitting at this point. Okay, so let me delete this alert. It's kind of interfering. So let me just delete it. So you are paying attention to this, and price, instead of breaking down, so let me clear this. Price gives you an indication, or by breaking above this swing level here. So this is price telling you that this is the direction in which it wants to go. So this is where we have the indication, and the indication is very important, as you can see, because you need to know where price is going to move. So this is the indication. So let me get rid of this. Okay. Indication. So after marking your indication, usually the next step that follows is the correction. So the correction is when price, reverses back after giving you the indication to, take out, to grab liquidity most of the times, or to readjust itself so that it can take another bull run or another leg up. Okay, so this is your higher time frame. Usually the higher time frame that you're using with the ICC is either 1 hour, 2 hour, the 4 hour time frame. So 1 hour, 2 hour, the 4 hour. Usually the 1 hour and the 2 hour are for your daily trades, but the 4 hour is for your higher time frame trades. And the 4 hour time frame usually is the one that gives you the big moves that happens in the market. Okay, so now you are looking at this indication on the higher time frame. So assume that this is the higher time frame. So this part of the movement is what we call the correction. Okay, so the correction here, so this is what we are going to talk about today. Now, for the correction, normally you want to monitor this on the lower time frame. Okay, and I'm going to show you why very soon. So let's say you are looking at the indication, and this represents the higher time frame movement. Okay, so on the left side. Now on the right side, we are going to represent the lower time frame movement. So for ICC, usually the lower time frame is the 5 minutes, the 15 minutes. Sometimes you can use the 30 minutes, but these are the two major time frames. Okay, lower time frames when it comes to the ICC. Now what is interesting is that usually when price is giving you the indication on the higher time frame, okay, normally it looks like a trend on the lower time frame, and you can test this out for yourself. So now let me show you what a visual representation of what that will look like. Okay, so now let's assume that this is the line here. This is the level where sellers are seated. Okay, so this is that swing level. Okay, now let's assume that on the lower time frame, okay, the movements that I'm going to make right now is like the indication on the lower time frame. Okay, now like I said before, this indication will look like a trend on the lower time frame. Now sometimes, okay, this trend is not perfect, but if you're able to, sometimes you have to switch between the 5 minutes and the 15-minute time frame so that you can, see the trend which is the most cleanest. Okay, that is the purpose, because sometimes the 5 minutes can be a little bit breaking up to the upside and then the downside, but when you check the 15 minutes time frame, the 15 minutes time frame is actually smooth and it's trending nicely. Okay, and I've experienced this countless times. So what you want to see is that on the 15 minutes time frame, price is going to be giving its miniature or its small indications, corrections, and continuations. Okay, and this shows that price is on an uptrend on the 15 or the lower time frame or the 5 minutes time frame. So this is what the indication is going to look like. So price is going to be making new highs and then new lows, new highs and then new lows, new highs and then new lows. Okay, so this is what the indication is going to look like. Just this indication step that you can see here. Okay, and usually what I do is that I mark my swing lows with my line 2 here. I just mark my swing lows. I just mark my swing lows. I just mark my swing lows. Now, the reason you're marking your swing lows is, remember I told you that when price is making swing lows, it usually means that buyers are sitting at that point. So if price is able to clear that point of buyers, it means that there are no more buyers, or it means that the sellers are getting much stronger than the buyers, because buyers are not able to, keep the point where price broke through. So let's say price is able to come back and break this point here. This is showing me that, okay, this is price showing me that, okay, we might start a new trend very soon. Okay, we might start a new trend very soon, and this is what you want to pay attention to. So you can see that over the course of this movement, price is going to be maintaining a swing lows, which means that buyers are pushing price up from the lowest point, and they are going up. The reason why you can notice that buyers are strong is because sellers are also creating swing highs. Sellers are also creating swing highs. Now I don't want this to look messy. I don't want this to look too messy, but you can see that sellers are also creating their own swing highs. So the fact that price is able to break above these highs is showing you that buyers are stronger than sellers. 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 Now, the moment sellers decide to break the swing low of buyers, what do you think that means? It means that sellers are now getting stronger than buyers. This is where the correction journey looks to begin. But at this point, the correction hasn't begun yet. Okay, so at this point, the correction hasn't begun yet. What actually begins the correction is, remember, if price breaks this level of buyers, it means that sellers are getting stronger. But what confirms this is when price makes a lower high, when sellers push the market down even further. So let me show you this. So when sellers push the markets down even further, so if sellers were sitting here, now sellers are now sitting here. This shows that sellers are getting stronger because they're pushing the markets down. Just like the way the buyers were pushing the markets up previously, sellers are now pushing the markets down. The tables have turned here on the buyers. So if this continues, this is where we get the correction, or this is where we obtain our correction from. Okay, so price is just going to be making this. Now remember, just like the way you are marking that of the buyers, you are also going to be marking that of the sellers. So let me see. Let me just get rid of this. So now you're going to be marking your swing highs. You're going to be marking your swing high levels, swing high levels. This is the correction. So now to recap, okay, but before that, let me see if I'm good. Okay, I'm good. So now to recap, we know that for the correction to begin, okay, you have to first switch to the lower time frame. Okay, we have to be looking at things on the lower time frame. For the correction to begin, price has to finally break the level where buyers are sitting. That is 1. 2, give you a lower high, meaning that sellers are getting stronger. Okay, that's the second one. So 1, break a level of where buyers are seated. 2, give you a lower high, and then start moving down by breaking, support levels. Okay, so this shows you that, okay, price wants to correct, or price is giving you the correction. So I'm going to give you a moment to take a picture of this. I'm going to clear this out so that you don't get confused here. I'm going to leave out the most important one, which is this line here, because this is what causes everything. Okay, price breaking the level of bias is what changes everything. Okay, so you can take a picture of this if you want. You can go over this period of the video if you want, because I'm going to be taking you to the chart and showing you examples of this. Okay, so let me clear everything. Now when I go to the USD JPY chart, okay, I picked this because it's one of the most cleanest. Now let's identify some of the indications here. You can see that this is the 2-hour time frame. We can also go to the 1-hour time. So let me go to the 1-hour time frame so that you can see this. Now you can realize that the 2-hour time frame was much clearer and much defined than the 1-hour time frame, but it's also good. So now if I'm to come to this point in the market, okay, I think you can already identify the indication for me, because if you were to mark our swing levels, you can see that this is a swing level, this here is a swing level, and this here is a swing level. Okay, so you can see that those 2 points are where buyers and sellers came respectively. Okay, buyers, sellers. So when price broke this was an indication, right? But in this instance, you don't use a line to mark. You want to mark a zone so that you account for a region of the swing low, not just a line, because you want to leave some space there just in case. So you want to mark out your area with a rectangle tool and not just a line. Okay, or if you want to use a line, you can make the line very thick, right? But normally I just use a rectangle to mark my levels. Okay, so now let's get rid of this and let's look at the main thing here. So I'm going to take out this rectangle tool and I'm going to mark this level. Now you can see that when price gave this indication, okay, it showed that it was going to move down. Okay, now there's something very interesting that happens here. So you can see that when price gave this swing low here, let me just extend this just here and then extend this. You can see that there's another swing level here that if you can identify with your eyes. Okay, so this is the swing level. I'm pretty sure that some of you are able to identify it before I marked it. So you can see that this is a swing level. Okay, this is a what? A swing level. And if this is a swing level, it means that there are sellers sitting at that swing level. So at any point in time, if price breaks this swing level on a higher time frame, what does it tell you? It tells you that price wants to move in that said direction. Okay, so this is a swing level. This is an example of the indication. So the movements that you are seeing here is what we call the indication. Okay, so let me go to the 5 minutes time frame. And then let's see what is happening there on a micro level. So this is the indication. Okay. Now, remember I told you that for the indication to look like a trend on the lower time frame, right? As you can see on the 5 minutes, this looks like a trend. So you can mark this support level here. Let me just widen this a little bit. You can also mark this support level here. You can also mark this support level here. You can see the way price is respecting these support levels. It's not breaking the support levels. Okay. You can also mark this support level here. This is the indication. Okay, this is the indication that we are still marking here. So if I zoom in a little bit, you can see much clearer. So now this is the nearest swing level. There's also another swing level here. So now if you need help marking your swing levels, you can actually use the pivot points high and low, and you can see that pivot points is marking our swing levels accurately here. You can use the pivot point high and low. So this is a level I would mark because you can see that sellers were pushing this down and then price moved sharply from here, and it was a lot of selling, but then there was a huge buy up. And this looks, the same. If I drag this here, you can see that that swing level is actually the same, or they are the same level. Okay. So now you can see that when price broke this swing level here, that was not the beginning of the correction. Okay, this was just the indication. When price broke this swing level, it did something. It gave us a lower high here. So remember, just like in the image that we saw, when price broke this, it made a lower high here. And you can see that because of this lower high, we can confirm that price is actually in the correction phase. Okay, so you are going to do like what you did from the beginning, and you're just going to mark the swing highs. Okay, you're going to mark the swing highs because price has given you an indication and you're waiting for, or you're tracking the correction. Okay, you're tracking the correction. You are tracking the correction. So you can see this, you are tracking the correction by marking your swing highs. You are tracking the correction. This is the correction. Okay. Now there's something that occurs here that is very interesting, but I'm going to speak about this when I am making a video on the next chapter, which is the continuation. So this is an example of the indication and the correction. Now let's go back to the 1 hour time frame and let me show you another example. So let's go back here. Let's clear this. So now when we come back to this phase here, okay, let's identify some indications and corrections. But before that, we have to identify our swing levels. Okay, you can see that this is a swing level because when price was moving up from this point, it started moving down when it hits this level. Okay, so this can be considered as a swing high here, or a resistance level, what most people call it. Let me check if I'm good. So a resistance level here, and then a support level below. A support level because this is where buyers are seated. Okay, this is a support because this is where buyers are seated. As you can see, price was moving down and then it's reversed from here. So now you can already identify the indication from here. Now when I go to the 5 minutes time frame, you realize that this looks much more like a trend. But on the higher time frame, you couldn't make much of it. Okay. So as you can see, this looks like kind of a trend. Although price was extremely bullish, this is a swing low. You can see that this is a swing low. This is a swing low. This is a swing low. Actually, I wouldn't consider this as a swing low because the movement here wasn't, too much here. So remember that this is the indication that you are marking your swing levels. So now I'm going to show you an example like this. So you can see that this is a swing low. Okay, this is a swing low. Now you can see that I told you that when price is making the indication, it's going to be making swing lows. The moment price breaks your swing low, this is where price is trying to show us that, okay, the correction might begin. Okay, the correction might begin. But what actually confirms the beginning of this correction is when price makes a lower high after that. Okay, but you can see that immediately after price broke, it created a new high, which means that the correction hadn't officially begun. So in that case, what you do is that you mark this as your swing low again. This is your current swing low because price, didn't start the correction from here. So you mark another swing low. Price broke it. Okay. Now you can see that when price broke it, immediately after, it gave us a lower high. It gave what? A lower high. Now you can see that this is where the correction began from. Okay. So you'll be marking your swing high levels. You can see that price was a little bit choppy at this point. Your swing high levels, your swing high levels. So for those who are trading prop firms, you can use the 1 hour time frame as your higher time frame. There's a lot of trades that happen, just look for the pair that you are trading, look for an indication, look for a correction. So you can see that price is just maintaining this point here. Okay. So this is where I'm marking. Now in the last video, I'm going to show you how to take your entry. So you can see that just after this, just at this point, there's something that occurs that enables us to take our entries here with stop loss below this level. We target the highs. So I'm going to show you a last example. That is what is occurring this week on this pair. So you can see that there are a lot of swing levels here, but the one that draws my attention is this swing level. Now you can see that there are a lot of sellers sitting at this swing level. So whenever price comes to this level, it just reverses down. Okay. Similarly, there are lots of buyers sitting at this swing level here. So whenever price gets down here, it reverses sharply. So you can see that because price is not breaking any of this, it is not showing us a particular direction that it wants to go through. But now you can see that something interesting has occurred. Price has finally broken above this and given us a close above this level to give us an indication. Okay. When I go to the 5 minutes time frame, this indication looks like this. You can see that there's a swing low here. There's a swing low here. There's a swing low here. Okay. So now, usually when you can see that price made this huge bullish move here. So for price to start the correction, it has to break this level. That is normally, but that is not usually the case. Okay. There are some things that you should look out for that I'm going to show you right now. So you can see that apart from this, you can see that when price came here, it made a swing low here. You can see this because when price was selling, it got here, then buyers give a certain reaction, try to give a reaction here, sellers try to push down, and then they give a reaction. So this shows you that this is the new level where buyers are seated. Okay, but buyers were not able to push price up to continue there. Sellers gave this, or sellers push price down to give this break here. Okay, so now this is something that shows us that the correction might actually begin from here. So if the correction wants to occur right here, you are going to see price make a lower high. Okay, so price will make this lower high, but then when it goes down here, the correction has officially begun. Okay, so price is going to be doing something like this. Then what do you do? All you have to do is to mark your levels. You are marking your levels because you are waiting for price to break these levels. Break these levels. Okay, break these levels. So this is something I'm going to leave you off with. If you like this video, make sure you share with someone who is suffering with ICC or who is having some difficulties when it comes to ICC trading strategy. I wish you all the best. I wish you a good trading week, a good trading month, and a good trading year. See you in the next one.